Good morning, traders and investors. Hope everyone is having a happy Friday so far. Triple D and I got a good show for you today. CC Lagator at 8:35 a.m. to talk about options expiration. Couldn't have CC on a better day. One of our favorite pre-market prep guests. A broad market rally here this morning. Value stocks are picking it up. A reminder, President Xi and President Trump are going to be speaking in the UK. We're going to hear hopefully some results from that meeting a little later in the morning. The meeting is scheduled for 9 a.m. Will we hear some details on a possible TikTok deal? Could there be implications for Oracle? We'll talk about it a little bit later. Earnings overnight. FedEx with a big earnings beat and guidance, which we saw a Bloomberg article indicate was a sign of parcel demand rebound. UPS, of course, sensitive on that news. Apple's iPhone 17 on sale today. Couple ratings we might touch on a little bit later in the show. Tesla upgraded at Baird. Intel with a downgrade to sell at Citi and upgrade to buy at Benchmark. We'll probably have a little bit of time a little bit later for some ticker time. So get your tickers ready, folks. We're going to get it going here on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Here we go, folks. Let's see if I can do my best impersonation of Joel here. S&P 500 futures, we're looking at up 0.1%, just under 6 points, 6,699 and 3/4, 6,700 just now. Let's take a look at the Qs here this morning. Qs trading 595.32. We'll look at crude oil here this morning. Crude oil trading down about 0.5%, 62.89 per barrel. What about gold? Gold here this morning. Gold trading around the 36.82 level, up 0.1%, about $4 per ounce. What else does Joe usually do here? Bitcoin. Let's take a look at some Bitcoin. Bitcoin trading down about 1%. 116,625, let's call it, on Bitcoin. I wonder how I did on my impersonation. Let's bring in Triple D to the things. Good morning,
Really
Triple
wow.
D.
I thought it was
Woo!
Joel.
You thought it was Joel?
Yeah, Joel
Heck
Incognito.
yeah.
Yeah.
Heck yeah. How's your
Excellent
morning
job,
going?
Brentster.
Thank you.
Excellent job with the intro. Let's continue doing an excellent job on this options expiration quadruple witch. I got a little bit of a scratchy voice. We're trying to work through that. Yes, it is school season, and my daughter's got a little scratchy voice. I do too. Hopefully, it's not going to turn into anything bigger. But the show must go on, and the beat goes on. You know, that's a great song there. So we use that for the title here. Why? Because the markets just continue to climb. Wall of worry, whatever, anything this market throws at it, it doesn't matter. It just continues to go higher. Yesterday, same story. IWM making new 52-week highs, closing at new 52-week highs. And again, that's been a lot of years since we've been up here on the IWM. We're going back to 2021. So we got close. 2024 didn't quite get up here, but I think we did yesterday. I think we actually kissed a new all-time high. So, which is awesome.
Looks like it.
You're seeing broad market participation here now. Why? Because we're starting the interest rate cut cycle here. And multiple, I believe it was Bullard this morning saying we see 3 cuts this year. That's what the market thinks too. We've looked at the FedWatch tool. They think that as well. So the beat goes on, and dips are being bought on everything here now because money managers who have been underinvested are like, oh crap, here we are. Now we're very close to going into the fourth quarter here, and I'm underinvested. I got to start buying some stocks. So I think that continues. I don't see a reason that the market just rolls over and dies, at least at this point in time. One day it will. The bears will be right. They'll have their day. But at this point in time, the beat does go on. News
Dennis,
on individual stocks, Minster.
Real quick, I think you, like Dennis, I think maybe a month or two ago, I feel like you were a little just uncomfortable with some of the kind of rotations that we were seeing. We were seeing strength here and not here, or we're seeing strength here and strength here, and that's kind of weird. You feel like this is a little bit more of a like an addressable market? Like this is like a little bit more of a normal, familiar market for you
I
in
don't
this
know if
talk?
it's normal, but it's very broad-based, and we haven't had a broad-based buying market really for years. It's been tech-based. But right now, in the last month and a half, we've been talking about the value stocks picking up, and it's been going on for the last month and a half. But now tech is participating with it. So what we saw happening a month ago was value starting to get a bid, and tech was lagging. But now they're starting to come in to buy everything. You know, the meme stocks are all running and rolling. You've got social media stocks moving. You've got, obviously, Intel with its move yesterday. So ultimate laggards showing a lot of life here too. Just this market's just full of like buy the dip mentality here now. And I think, it's very broad based now. It wasn't as broad based 6 or 8 weeks ago.
Gotcha.
You brought up Oracle, and it's interesting. It's a good place to start. It has pulled back. We're going to potentially get, more news on this TikTok deal here today. So Trump holding a phone call here, supposedly at 9 a.m., although I heard the call could already be going on.
Okay.
They're probably going to try to make a deal with the TikTok. I mean, I think they've kind of got it. So Oracle, we believe, is going to be benefiting from this. Oracle is trading up. So it's catalyst trading. Sometimes these can be buy on rumor, sell on news. Right now, Oracle's getting a little bit here this morning on the rumor. Also staying with, big cap tech, and Oracle is that now. I think it's number 12. Apple is having a pretty good day here too. And again, event catalyst driven trading working here again. It's up 3 points this morning. Why? Because the Apple iPhone 17 officially went on sale today. So we had Tim Cook, CNBC had them on this morning talking. The phone is lighter, gonna float away in your hand was what he said on. So I was like, wow, I'm like so impressed with the innovation. One thing to say though is that as much as we mock Apple that they haven't innovated much, the stock is still near highs. If they ever start coming out with actually AI products like innovation here, Apple could go a lot higher. So we haven't really seen much innovation there, but the market, being as forgiving as it is, doesn't seem to care. They believe that eventually Apple will win and will be in the AI race along with all these other companies here too. So they don't mind paying 34, 35 times earnings for it. I do, but I can't argue with the stock performance. It's done pretty well.
A couple articles around the web this morning, like Bloomberg, CNBC, highlighting strong demand for Pro models, for the iPhone 17 Pro models. I don't really know where they get this info. It must be out there, but personally, I didn't hear anybody getting excited about the Pro models, like my iPhone user friends or anything like that. So I don't know. We'll see today. Will we get an indication if it's going on sale? If the models are going on sale today, will we get an indication of sales today? No, we're not going to get anything like that as far as I know. We're probably going to have to wait at least a few weeks or a couple months. But when we have these catalysts here, of course, you want to keep this stuff in the back of your mind.
I think so. I think it's important to we talk about this in the STN room all the time, like catalyst trading. We could have named that whole room the catalyst room because, really that's all we're doing is looking at potential catalysts and trying to get ahead of them. And I think it's important, we're obviously all have to do a better job with that, but I think there's so many catalysts all the time, just staying ahead of it. We do the earnings run-ups very well. Sometimes these, we miss some of these investor presentations here. We need to probably get more. It's hard because there's so many investor presentations.
Yeah.
Like on some weeks, there's like dozens and dozens of these things. So
which
it's hard to know which ones are
not
actually going to matter and which ones are
exactly.
not. It's harder to decipher through. Like we know CrowdStrike yesterday dropped guidance at their investor presentation, but these companies don't always do that. So, I mean, you could listen to them all. You could be running around at them all and probably not finding anything to trade off of in 95% of them. But then 5% of them you grab, and all of a sudden a guidance drop on CrowdStrike and the stock goes up 30, 40 points, 50 points. So I think it's important to, keep that perspective here. It's not exactly like finding a needle in a haystack, but sometimes on these investor conference calls, they're tougher to figure out which ones matter and which ones don't. Continuing on with the news parade here, we're flying through it. Let's go to the earnings. We had two companies major reporting last night. First one was FedEx. It reported, we talked about this, that the stock was probably, usually what happens is it gets up there near its expected move. and the rug pull. If so, we actually set this trade up that if it rallies, probably eventually going to give it back. It has indeed done that. It took till this morning, though, so it held up very well for a very long time. But FedEx has indeed actually just ticked red here for a second ago. It's bouncing back up. But there's certain stocks that are just hated. FedEx is one of them, unfortunately for FedEx shareholders. Had the big pop. Give me the earnings.
Give you the results. We're reporting Q1 adjusted earnings 383 versus 362. That's a beat. Sales coming in 22.2 billion. Also a beat, a modest beat versus 21.7 billion. They gave some fiscal year 26 guidance. They're expecting earnings $17.20 to $19. The analyst estimate was around $18 or maybe even a little bit under. The guidance when we were looking at it last night was a little weak, but the company said that they are expecting sales growth, like 2 to 4% sales growth for this year. And the street read that as a sign of parcel demand rebound, at least according to a Bloomberg article. We were a little surprised by the sharp move higher, although the expected move in FedEx was $17, right, Dennis, last night?
Yeah, which put us right into it. If you go out to and if you go out to the daily charts here, Brentster, which I want you to do right now, you can see Joel always talks about confluence, where levels came into play before. And if we look back to July, which you could go back to right now, you got to go a little bit farther than that, Brentster here. Actually, or do you? No, you went out too far. Sorry. Sorry. Yeah. So if you want to go a little bit closer, you're out really far right now. Go a little bit closer. Go a little further than that. I'm being really fussy with you here. Give Brentster a break here. He doesn't usually work the charts here. Do you see those couple highs? You can point them out. One, two, 3 times up near 245. We failed. Hey, guess what happened last night? We get up. The expected move was 242. We get a little bit through that to 243, 244, just to spook anybody who is potentially playing it off the expected move. And where do we fail? The same spot we failed multiple times before, and now we've peeled back. I know there was a few people in the Stock Trader Network room that had good shorts on it. Hopefully a few of them still held it. Congratulations to those who did. Stock has given it all back as we kind of, predicted in the STN room.
And then UPS was like almost at one point, UPS was kind of moving more sharply, in my opinion, than
it got
FedEx
violent
was.
for a bit. UPS.
Yeah, like this. I think it was like the 285 or 286 level. I think it was the 286 level. UPS got up to 280 to the 86 level with FedEx there, and then it like went up another dollar, and then another dollar. Even the after hours high, $88 in UPS. I don't know if there was similar kind of confluence here in UPS as we looked at in FedEx.
No, not as pronounced.
Nope, not as pronounced.
And one other thing to consider is when you are chasing these stocks that have these awful charts, and when you go out to the daily, you can see what's an awful chart when it's at the top left and going down to the bottom right, trending down stocks on your dailies, not intraday. We don't need the intraday chart. What we need to look at is like the 90-day chart. Stocks are in downtrends here. They find happy sellers as the stocks pop. Why? Because people want to get their money back. Behavioral finance, to obviously loss aversion is what they call that. People don't like selling at a loss. So the problem is when you have everybody sitting down in this stock, there are willing sellers everywhere. So you get a 2-3 point pop in UPS last night. It's just another gift again. It has given it all back. It couldn't even hold it for one night. Now, again, FedEx's fault. FedEx rolled over here too. But they're both in the same boat here. This industry, which I've been saying for a while, I say both these stocks are value traps. I'm going to continue to say it because I've been absolutely correct. It's just being disrupted. There's going to be, obviously, way more ways to get your packages in the future. And people are delivering their own, companies are delivering their own packages. Why go to the middleman? Amazon cut out the middleman a long time ago. We don't need UPS and FedEx. They deliver their own packages. That was the beginning of the downfall here. I know everybody says, ooh, nice 7.68% dividend on UPS. But it's not so nice when your stock is falling 10, 20, 30% a year trying to get that dividend. So is there value here? I think it's a value trap, and I think it remains a value trap.
Triple D. What about another earnings report from last night? Lennar.
Yes.
Home builder space. Lennar reporting later, about 5:50 p.m. We were kind of waiting around, but we were waiting around too long. Lennar Q3 adjusted earnings $2. Looks like that was a miss versus the 210 estimate. Sales also missing at 8.8 billion versus about a 9 million estimate. Let me pull up the chart on Lennar here. We'll take a look at the stock.
Earnings were not great. You were pointing this out, even in the chat. The earnings were not great here. The guidance was not great either. I don't think it was a situation where it was, so awful that they're going to knock her down like another 10% here. It's tried to chop around. It was down, then it came back and almost kissed, flat because the buy the dip mentality came in and then it started to leak. So it's kind of just settled in here at 129. Sometimes you get a feeling it's like, oh, I had the feeling on FedEx that it was probably going to pop and drop.
Yeah.
On this one, it's just like a curveball. I have no feeling for this one. So, I could see it going either way. You have to consider that we are going to rate cut cycle, and that is good for home builders.
Sure.
So there's probably institutional money that says, I kind of want to own home builders in a rate cut cycle. So maybe that is making people come in and buy the dip, even though the guidance was not great.
Like information into the home building space, earnings, existing home sales, new home sales, our data points, they've just been kind of benign for like a while now. Like, yes, Lennar is moving at 2 or 3% lower here this morning, but for the most part, news items just kind of like haven't been moving the space too much. I think it's all just attached to where interest rate cycle is going to be going.
Well, and you can group all those stocks together, which, it's not a coincidence here that IWM is starting to explode higher. It's not a coincidence that XBI broke out yesterday. It's not a coincidence that interest rate sensitive names are starting to rally. Sometimes these things don't happen instantaneously, but overall they do. When we went into that interest rate hike cycle at the beginning of 2022, that spelled the top for the IWM. Now that we are going into this interest rate cutting cycle, we're seeing the opposite effects happen. So I think at this point in time, it's prudent to probably own small caps. It's prudent to own interest rate sensitive names like the XBI. It's just the rotation here of money managers saying, hey, if we're going to get 3 cuts this year, it's good for a lot of these companies. Which company probably benefits the most from this is probably rocket companies. We talked about this. They've been buying the stock relentlessly. Yes, it's turned into a bit of a meme stock here, but I also think it's in consolidation to go higher. So I look at it here this morning, and you're consolidating here for the last 6-7 days. Looks like to me, it wants to go higher. Is the valuation stretched a little bit? Sure, but the story is hot, and the macro environment suits well for it. So I think RKT can go higher from here.
We never look at the other one. Just real quick, UWM. Yeah, it's certainly not a meme name, but
But it's been moving up.
Exactly.
Even if.
Yeah.
It's not a coincidence that when did we get the one data point there that really kickstarted us? Wasn't it like mid-August? Like there was one data point that's like, oh, this is like we're going up. It was like light CPI or what was it? And then obviously we had the one hot piece that was the PCE or whatever it was. But
yeah,
remember we had the light CPI? What
day was that? I don't. Oh man,
it's usually around like the 13th or the 14th. So I'm just looking. August 13th, UWMC started to explode. So I feel like that was the turning point where it's like, oh, they are going to lower rates next month. And the stocks, like all these interest rate sensitive names, have been being bought ever since. Like IWM had a big day, August the 13th, August 12th, August 13th, we're looking at. I'm just looking through the charts here. XBI started to go up that day. It's not rocket science, folks. Macros do drive stock price. Yes, individual stock stories drive stock price as well. But overall themes, very much driven by macro. I think being against this theme and saying, oh, this IWM, it's going to double top up here. Well, you got to look at the macro environment that we're going into. So as long as there's no geopolitical headline that harpoons the whole market, I got to think that I want to be long stocks here, and the interest rate sensitive names are a good place to be. Maybe it was the jobs report.
Maybe it was the jobs report. Somebody in chat said that.
Goldfish man, Joel would know. If Joel was here, he'd be like this because Joel remembers everything. I can't remember, what I ate for dinner last night. So I'm just looking at the chart and saying, I do remember something in August where we all of a sudden said, hey, I got off the bandwagon because I originally at the beginning of the year saying no cuts this year. And then I got off that bandwagon in August and saying, yeah, they're cutting. And that's where we are. And it was the Powell presser too on it too. There was a Fed and then Powell. That's what it was.
It was when he spoke at Jackson Hole, right?
Yes.
It was Jackson Hole. They had the binary event.
Dovish.
Yep, exactly.
He gave in.
Yep.
Yeah. There you go. The chat wants some ticker time here. We can do that in a couple minutes. We got a couple more news items to get to here. And then if you want to grab a little bit of early ticker time before we do have quadruple witch, there are some big imbalances already here, folks, pre-market imbalances. We're going to have CC Lagator on at 8:35. He's going to talk to us about the options action. Our option specialist, CC, is awesome. So make sure you stay tuned for that. But there's big imbalances already here this morning. I see like ExxonMobil 1.3 million to buy. So these may pair off. We're going to ask CC about these. Sometimes these are just out there to get done too. But usually it's institutions jockeying stocks against their open options positions there. So we'll ask them about, that at 8:35. But in the meantime here, I want to get to a couple more notes. We didn't recover Intel's move from yesterday, and we have to do it because this was an incredible move. It requires talking about it twice because of the move. We have analyst commentary coming in here now. Obviously, they did the deal. NVIDIA doing the deal, investing in Intel, the huge pop yesterday. The AMD dip got bought, and the Taiwan Semiconductor dip got bought. They couldn't keep those stocks down. Intel kind of got sold a bit. It opened up near the highs and then leaked back a little bit. It's getting sold a little bit here today. We have dueling analysts here this morning, so I'm going to start with the bad first. We have Citigroup downgrading Intel to sell. I'm going to open up that note here right now, actually, so I'm trying to open it up. I don't know why it's not opening for me. Oh, none of my notes are opening here. What's going on? Street Insider, what's up? I can't get that note to open. Anyway, so we have. Sorry,
I got a little bit of color.
Yeah, give me. There it is. I got it now. I don't know why.
Okay.
Well, I still don't have color. So we have Christopher Danley from Citigroup downgrading it from neutral to sell, taking the price target from 29, or taking the price target up to 29 from 24. So they're downgrading it to sell, which is interesting. I mean, you come out and you're downgrading to sell if you have this move, and then you're taking your price target from 24 to 29. So you want me to sell here at 30.57 because I think it's going to 29? I was like, I would have kept my price target there. So that's interesting to me. So I'm not putting a lot of weight in this downgrade here.
The valuation calls will have that with the price target changes a lot. And this is, as far as I'm seeing, this looks like a valuation call here. I see a comment, Tip Ranks article saying it's just time to sell, the Citi analyst said on Intel.
And then the other rating is Benchmark, which I'm having trouble clicking that one too. Why? Benchmark upgrading to buy. There. I don't know what the heck's going on. I think it's my computer. Click. Not clicking. Anyways, Benchmark upgrading to buy. So I don't know if you have any color on that one here either. Normally I have the color, but for whatever reason, let me try to refresh. I'm not able to click these notes. Can you hear me?
Yep, I got you, Triple D.
Yeah.
That's weird.
There it is. I don't know what the hell's going on with my computer. So Benchmark analyst Cody Acree upgrades Intel from hold to buy with a price target of 43. So you got an analyst going the other way here. 43 is a big price target. Like, that's a big move.
Yeah.
I don't know. It's hard to bet against this administration here right now. That's what we were saying yesterday.
That was our takeaway.
Materials. Yeah. Yep. When the administration's actively, taking positions, for the U.S. government in certain companies, they're probably going to get pushes by the U.S. government. The U.S. government has all the power. So, I mean, MP Materials, Intel, wait for the next one. There'll be more because he's talked about buying and getting interest in more companies here too. So I think we need to pay attention to that. Obviously, I had a great trade in Intel when they originally bought, but I sold it too soon. It was in consolidation station for a month. I don't know if anybody saw this NVIDIA move, but it was huge. So I guess you got dueling analysts. Citigroup thinks going to 29. We've got Benchmark going to 43. I'm more in the buy the dip camp here on Intel. That's where I'm sitting. Although when you got this huge gap, hard to really find a spot.
Technicals strengthen when they are tested and then rebound if it's in the case of Intel here. The $30 level this morning, they did test below it about a good 50 cents or so, came back over. How are you feeling about this $30 technical area that we've been looking at?
It's psychological, and we got down there yesterday, but it's not like critical support. Like if we do take it out, then you start getting in the gap area and people say, oh, it's going to go down to 25. It's not going down to 25, not anytime soon. There'll be people stepping up and institutional money managers stepping up in between there. But I mean, from a trading perspective, you'd want it to hold 30. So if you start seeing it breach 30, then it kind of opens it up. I mean, it could go 29, could eventually go 28. I kind of think that the dip is going to be bought here because there's just so many money managers again. It's kind of like the Oracle chart. Same thing. I came back. Think about the 50% retracement. That's why I struck on Oracle there was It was the 50% retracement of the gap up. So Joel did that. We were talking. It was we gapped up on Oracle News from 241 up to $345, so about $100. Then it peeled back 50, so it gave back half of it. Let's think the same thing on the Intel, coming from 25 up to 32.37. So that's about a 7.5 point move. So like 375 off of that would bring us down to about like 28.75, 29. That's where the Citigroup, that's where I think it's find buyers. So, and again, you can use VWAP, you can do whatever. We always like 50% retracement. So 50% retracement of the gap seems like a logical area for people to start stepping in.
Also, this morning, Rating Land.
Yeah.
Tesla here this morning upgraded. Was it to buy, Dennis?
Yes.
At Baird.
Yeah, Tesla being upgraded to buy. And again, I don't know if I'm going to be able to get color on the note because I'm in there. I've got full color on this note, so it's good.
Okay,
Let's
sweet.
Check it out. Tesla upgraded to outperform from Baird. They're raising their price target from $320 to $548. That's a huge bump. Analyst comments. I'm just going to read it all because people really like Tesla. Well, people love it and hate it, so it's a polarizing stock. Analyst comments. Relatively muted stock reactions following a series of less than stellar quarters and investor inbounds regarding long-term initiatives lead us to believe focus has increasingly shifted to the future for Tesla. I agree with that. The recently proposed pay package is built on lofty targets for both product rollout and market cap. In addition to our upgrade, we use this note to illustrate the implications of each milestone on financials and are publishing a hypothetical pay package model to frame the opportunity. So, despite 3 consecutive quarters of missing estimates, Tesla's up 10% year to date, and it's gained 24% in the last month, respectively. Maintaining our view that volumes will likely decline again in full year 2025 and near-term fundamentals will be choppy, we now expect shares of Tesla to outperform as Tesla is increasingly viewed as the leader in physical AI. So they're not worried about declining sales whatsoever because the story is carrying the stock. It's true, all true. If this was trading just on fundamentals, this stock would be down at $200. This stock is not, or less. The stock is not trading on that. It is trading on that this is the physical AI stock and people are jumping in. It looks to me like it's in consolidation to go higher here. Just had to move from 350 to 420, 4 days of digestion. Does this upgrade take us out of here? Hard to say, but I would not be surprised if Tesla makes new all-time highs by the end of the year. I remain long the stock.
One thing that we haven't really talked about, Dennis, you and I haven't really talked about, somebody in our SCN room brought it to my attention a few days ago, maybe a week ago or something, but the electric vehicle tax credit officially expires at the end of this month on September 30th.
None of that is good for Tesla either.
Right.
Do they care, though? They don't value this as a car company anymore.
There you go.
I mean, none of it matters. They could come out and say, hell, we didn't sell any cars last quarter. I don't know why. And the stock would probably go higher anyways because it's just all on this. So, I mean, if you're trading Tesla off of its auto numbers, you are missing everything because it is not trading off of that at all anymore. Is it? You can make lots of arguments. Is the hype overhyped? Maybe. I don't know. It depends where Tesla ends up. But I tell you, if they do conquer physical AI and they conquer FSD and they conquer humanoids and all of a sudden everybody's got a C-3PO sitting beside them doing their work for them, I mean, that's a game changer. So I can see a path to where this is the most valuable company in the world. I can see the path. I don't know if they're going to execute. I mean, it's all about executing, and timelines are always, we never know timelines with Elon Musk, but I can see the path there. So it's hard to bet against this company.
Dennis, you would have a C-3PO instead of like an R2-D2?
Why don't we have both? The C-3PO talks. That's why I like the C-3PO, because it talks.
You don't like the beeping?
Beeps a lot. I don't want to learn how to understand beeps. Luke Skywalker learned, but I don't want to learn that. So yeah, I'd rather have a C-3PO. That could speak 6 million forms of communication.
Big fan over here, if y'all didn't know that.
I got the space shirt on even right now.
Nice.
Look, back in my day, we had 9 planets. Mold.
I still think Pluto's a planet. We have CC in the background. He's not at his desk just yet, but he's getting ready. We still had we did have like 1 or 2 other ratings. We did have CoreWeave, Dennis, new buy at Loop, citing AI growth trends.
Yeah.
We were watching the issue drift a little bit higher, kind of tick a little bit higher, and then we got the rating late last night. A little bit of color here. If you want, there remains a material underappreciation for how committed the hyperscalers and major AI lab frontier model builders remain to pushing the innovation envelope forward. That was an analyst again at Loop Capital. Loop sees potential for material upside to consensus estimates and ultimately EV to EBITDA multiple expansion. Price target on CoreWeave, and I'll pull my chart up here in a sec, was 165 from this Loop analyst.
It looks to me, if you bring up the chart, we'll get CC on here in a second. When we get to the options, he's just getting back to his desk. It looks to me like we got a little cup and handle forming. Not that I'm a big technical trader here, but it looks to me like it wants to go higher. You get a catalyst with an analyst here. I'm long CoreWeave right now for a trade. We'll see what happens with this move here today. Obviously, you won't want to see it go in red. Options expiration can do a lot of funny things to the stocks here too. So,
Sure.
When you're just trading stocks on news, options expiration can really move price maybe in a direction you didn't suspect. But just other things being equal, it looks to me like CoreWeave wants to go higher, and I am long.
All right, you ready for CC? CC, are you ready?
CC, are you ready? He's drinking a coffee. He's good. Thumbs up. Let's go.
Here we go. Good morning, CC Lagator.
How's it going?
It's going well. Thanks for joining us bright and early.
Oh, yeah. Good show so far. It's kind of a boring day, and you guys have already covered a half an hour of...
We're out of material now, so it's up to you. So we're just going to go CC, go.
Thank God it's expiration.
Well,
it was funny. I was looking into, like today, and I was sending those show notes and all, and I was like, man, there's no economic data tomorrow. You had FedEx last night. So it's a pretty boring day if it wasn't expiration, I would say. The most exciting thing is, Dennis, I think the IWM is the most exciting thing going on in the market, and sort of how that acts today. I mean, it's up a little bit pre-market.
Yeah,
so, I mean, this isn't a great day yesterday. This is a triple top going back to 2021, right? This is pretty significant. And I would say, Dennis, your take on it is the same take I have, which is you had this interest rate cut cycle assumption going back to Jackson Hole, pretty much. It was almost like the initial reaction was on the Fed day this week was a little bit I would say a little bit of confusion, especially during the Powell presser. He was like honest. He was really honest during that presser, where he was talking about like the dual mandate, and he was sort of like implying like we're in a really weird place that we're not used to being in, right? Where we're lowering rates and we've got inflation 1% away from our target and all of that kind of stuff. And so it was sort of a fascinating reaction, I think, coming out of, and then I don't know, have you all talked about, I think the other bit of confusion on that day was the dot plots versus the SEP or whatever?
The SEP, the summary of economic
during the press conference, and everybody's like, what the hell? Those two things were pretty divergent, like as far as what they were implying, I think, and that was some of the confusion. But I think coming out of it, Dennis, to your point, when you were trying to figure out what the day was, it was the Jackson Hole. Yeah. It's almost as if IWM's reaction yesterday was like, okay, we're in it now, right? And it was up 2.5% when the 10-year yield was higher yesterday. It's been higher the last 2 days.
I know. That's what was surprising to me, because we have seen IWM very correlated, with the TLT, and obviously inversely correlated with long-term rates, but it didn't care yesterday that long-term rates were rising. It cared just that, short-term rates are going down next month and we're off to the races. So there was a divergence there for sure. Totally. I wonder if it's a little bit with the weakness in bonds and the weakness in the TLT. Maybe it's just the risk on environment we're getting to now too, because when we were in normalized markets, they sell bonds because who wants to sit there for 4.5% when you're making 4.5% a month in equities? Yeah. So I wonder if that isn't playing out here a little bit too, where we see it as risk. Maybe it's the risk on mentality that's causing weakness in the TLT, and that's why the separation's occurring.
I think you just hit like three I think they're probably all correct to some standpoint. Like, I think it's a catch up to this last month of this assumption, right? So it's now confirmed. You're now in it. It's now safe, like I'm putting that in air quotes. It's now safe to do this IWM, do this small cap catch up trade, right? Because it was the only thing that hadn't, hit all-time highs basically. And then I think the short term, sorry, I got your cold, Dennis.
Everybody's getting this cold.
No.
The short term versus long term thing is really interesting, because I do think that's what's going on. Is that, like, if you looked even on the Fed on the Powell day, the short term rates, and by short term I think anything up to about 2 years, was still in the red that day. It was everything 2 years and beyond that reversed, and it was almost as if those were like, we've already priced this in. We priced this in over the past month. What else do you want us to do? We took the 10-year from 450 down to 4. We're going to dip below 4, and then we're kind of, so it's probably a little bit of that. I would say that I think the market has it right now, and I think I think IWM is going to break out. I think there's all kinds of fun ramifications that come with that as far as trading in the market and all goes. But I will say, like, just philosophically, it kind of has that story wrong. Like, TLT is the better measure, and longer term rates are what matters to those companies. Right?
Should.
Yeah, they're not borrowing a year out. So I don't know. I think that might be a little one. Like, if we do look back, a couple months from now and say that the market reversed lower and IWM was a head fake and all, it's probably something along those lines, where it's like long-term rates never went down. But I will say that I think that's what's going on. And the exciting part is, once IWM breaks out, stuff gets fun, and stuff gets crazy, and stuff gets stupid. And you wake up in the morning and there's 5 symbols you've never heard of that are up 50%.
Yeah.
Like, it's that kind of environment. And we might be about, it's possible we're about to enter that.
Well, and I think we've been in that. We talk about this like it's your stupid move of the day or your crazy move of the day. We've been covering this almost every day. It feels like for months here now. There's just something that's always up 100, 200, 300%, sometimes 2,000, 3,000%. How much of these moves, like on some of these names, I know it was driven by options activity, and this might be a good segue into talking about, how do some of these moves get started, and how can options continue to drive price? Can you talk about that?
Yeah, and there's the good question. There was a couple good questions in the chat. One of them, it wasn't even directed at me, but the Gerald Fitz one. Do you have that one teed up?
Yeah, sure.
Okay. So this is a really good question, because this is something that is to your point, is already happening. And if my theory is correct that we're about to get even dumber, like on that kind of stuff, it really is going to happen. So I don't know anything about that stock. I've never even heard of it, right? Which is kind of fun.
NVTS.
Yeah, like, it's kind of a fun stock. Like, this is the way you should look at options. It's just like totally devoid of any information on the company, right? So it's a semi company.
CC, you mind if I add your charts to stage?
Yeah, put that up.
Cool.
So what I'm looking for, to Dennis's question at first, how does it affect it? And so the way it affects it is, retail will either, this one maybe, I don't know if this is institutional or retail. I think it might be institutional, because I looked at the open interest really quick, and there's some big lines of open interest, meaning somebody individually piled into those lines of calls to the upside, or a bunch of, when you see retail pile in, it looks a little bit more evenly spread out to the upside, if you go to like a Robinhood options chain or anything. So in this case, what happens is, the stock starts moving higher, even on this move. If we were to see, this thing start to move back towards 10, let's say, which is not ridiculous in this kind of environment, you're going to start to see, and you're already seeing, upside call buys. And what that does is that supercharges the move to the upside, because for every 9 strike call that I'm selling in my old job as a market maker. Somebody's buying that from me when the stock's 6.5 or 7, and I'm only hedging 15 deltas on that call, right? And so as the stock starts moving up towards that 9 strike, I am picking up negative deltas as it goes towards that strike as a market maker, if I'm at Citadel or whatever. And I'm having to pile in I'm having to buy the stock every morning. So I come in the morning and the stock's up like another, 4% or whatever. I'm adding another extra couple percent of that, like at, prior to the open, just for me to try to get back to delta neutral.
Right.
And so I'm suddenly powering that higher. And so that's how it contributes to these like kind of gamma squeezes to the upside. And when things get really stupid, you start to see these crazy moves. It's ripping through all of those option strikes that retail, is long, and Citadel and Jane Street are short, right? And so what you want to look for, and this one is why I had you all pull it up, is it's kind of an interesting one in that you can already see it. So if I go to the options chain and I go out to like October, and I don't know, can you guys read this?
Yeah, we see it well. Yes.
Yeah,
Okay.
so yep.
What you look for. So what I'm highlighting right here is the IV. So right now the at the money IV is about 100.
Can you explain IV for the listeners?
That's just the implied volatility. So, and the best way to describe that is if you have the stock right now is trading 675, let's say, that means the 6 call is worth intrinsically 75 cents. If it's trading at $1.75, that means there's $1 of extrinsic premium in it, right? That extrinsic premium, that dollar, inflates and contracts with that IV number. So that IV number is in control of the extra amount an option is trading for, which is, time. It's the potential for move over time. That's what that extra dollar is, right? So in this case, if you look at like the at the money options, the 6 and the 7, let's say, it's about 100 IV. If you start going up this options chain, the way an options chain should look in a normal stock, and if we were looking at SPY, is as you go higher in the stock, the volatility actually should be lower. The IV of those lines should be lower as you go to the upside. In a stock like this, and you're going to be seeing more and more of this, I think, coming up, is look at this. So this is 100 on the 70 line. And then it's on the 9 line, it's almost 120. So it's a 20-point volatility bump, IV bump, from the 7 strike to the 9 strike. And so what that ends up doing, my sort of options trading recommendation in a stock like this, is you wait for that divergence to happen because it's not natural. This is a market inefficiency that's happening right here, where people are buying the upside calls. And what that allows you to do as a trader, so let's say you want to get long in a stock like this, I can tell you what trade to do in the options. It's basically buying the 7 call and selling the 9 call. And you're going to get rewarded for that skew in that you're only paying 65, let's just round, 65 cents in the 7 call out in October, and you're getting to sell the 9 call at 25 cents. And the reason you are is because other people are buying those out of the money calls.
Yeah, so you're getting $1.60 upside and only 40 cents of
only
risk
40
here.
cents.
5-to-1 risk reward.
Yeah, totally.
That's the best way to do it.
And I'm sure a 40-cent move in the stock would be nothing, right?
Yeah.
So
I did it yesterday.
so you're getting rewarded for other people buying that upside call. Now, what I would say is if there's a stock where you think this might happen and it hasn't happened yet, and you haven't seen that skew, and you're looking at the money options and it's 100 IV, and then you look to the upside and it's 99 IV and it's still sort of looking normal, that's one where you actually just, you might want to buy the out of the money or just the slightly out of the money call. Let it happen. Let it start to rip. Like if you caught really good timing, and then you let other people squeeze it higher, and then you start you basically leg into a call spread for free or whatever. You start selling it after the fact. You leg into it.
CC, let's look at Open Door, because this thing went crazy here, and it's probably a good example of like when retail or when, you know, social media grabs a hold of something and it just goes crazy here. And I mean, this stock, you know, obviously it's been Eric Jackson's been out there and promoting it everywhere he possibly can, but he has taken the stock from 50 cents to now $10 here. Are there ways to like look at the options and say and predict, you know, if this is going to have another move higher, or if it's starting to get exhausted here and maybe, you know, buyer exhaustion starting to set in? What are your thoughts? Can you just talk to us a little bit about the optionality in Open Door?
Yeah. So, you know, you were talking about the expected move earlier in FedEx, and we have another great question that I can get to on that. So what the other thing that happens in an environment like this, in a stock like this, is the same thing I just said about it's abnormal for upside calls to be 20 points IV higher than at the money calls. Also, what tends to happen in a normal stock is as it goes higher, the volatility overall collapses. And as it goes lower, the volatility increases. If you were looking at the SPY or the SPX or the Qs or IWM, that's how that works, right? And for good reason, right? It's the escalator higher, elevator down, right? And so commodities are the opposite. Commodities crash to the upside, you know, drift lower. And so they have the opposite options chain. What ends up happening in a stock like this, or any stock that with a chart that looks that ridiculous, is when it goes higher, the volatility explodes. When it pulls back, the volatility collapses, right? So you have to be very careful in a stock like this. Let's say you were going to short it. You need to be very careful about buying a downside put in a chart that looks like this, because what's going to happen is you are going to buy, let's say, a October expiration. The expected move is 6.5 to the downside, right? What is that? What percentage is that? That's 40.
Gosh.
It's 30. Yeah. So the expected move out to October expiration is 35, almost 40%, right, in this stock. And that's to the upside and the downside. Here's the problem. If you buy a put, and this right now is 175 vol out there, if you buy that put, by the time it gets down there, it's going to be like 100 vol IV. So all of that extrinsic premium that we just talked about is actually going to collapse as you go lower. It's what happens if you buy upside calls in a normal stock, in a normal market, and it creeps up to your call and all the call value goes away. So you're like, damn it, I called this. It went up 5%, but it took 3 weeks to do so. That's the opposite happens in a chart that looks like this, where you actually might buy an out of the money put. You might get down to your put and the whole thing's gone because IB has collapsed.
Right.
So the higher this thing goes up, the wider the expected move is going to get, and even percentage wise. And then as it compresses, people are like, all right, the mania is gone. And you can't, the at the money straddle. I've even seen it in some cases. That's the expected move. And there's a great question on this. It can't go below 0, right? So you can't have a straddle in open that is more than 994. Even going out, if you went out 10 years, if they had an options chain that went out 10 years, you can't have a straddle that's more than 994 because it's free money to the downside if you sold it, right? Because the stock can't go below 0. So you see all kinds of weird inefficiencies on that front too. So the most obvious, you know, thing to remember was the meme stock, GameStop, at the AMC days and all that, is you get this weird situation where, you know, if I was playing for a short in open or any of these stocks at the end of this cycle, if it ever comes, you can go pretty far out and you can actually like sell premium to the downside. Like you can do it in the way of like a butterfly. And this is, I'm nerding out, but there's ways that you can get bearish selling premium, knowing that your risk, you basically like pick a target, like anywhere between 1 and 8, I make money. And there's ways to do that in the options at these high volatility levels. And you're basically like, my max gains at 4 but anywhere in between here, I make money.
I think, CC, I think you were gonna ask about, or you were gonna point to the question we got a little bit earlier from Philippe on kind of like FedEx earnings and the expected move calculation, reason for summing puts and calls rather than using a call premium for expected move up and put premium for expected move down.
Yeah. So this is a great question. So what Philip's asking is Philip or Philippe. If you look at the FedEx expected move was right, you all were pointing it out, it went right to the level, right?
Right.
Now, what that is based upon is the at the money call and put, right? That in the case where it closed yesterday, which was what, 226. So it's like the 225 call and put. And it's added together to get the expected move. Now, Philippe's question is, well, if that is what was that, about $18 or something like that?
Yeah. $17, $18.
Yeah. So that implies that, it was an $8 or $9 call and an $8 or $9 put at the money. So if you are buying that call and you pay $8, well, clearly, if it goes up $14, you're probably in pretty good. You're in pretty good shape. And if you bought the put for $8 and it went down $18 or $16 or whatever, you're probably in pretty good shape. Here's the difference, and here's why the expected move is based upon that. Is that entire expected move is the total premium left in that market, the extrinsic premium. So if there was a 226.5 strike last night and you had a $16 expected move, all of that $16 is the extrinsic premium. Both that call and that put are technically intrinsically worthless. Like if the stock was just finished exactly at that strike. So if I'm at Citadel and I am long, let's say everybody has sold me that call for $8 and that put for $8. I'm long $16 of premium. I need the stock to, and I'm hedging delta neutral as it moves. So it doesn't matter if they're calls or puts. All I know is I own $16 of premium. And that means I need the stock to either move $16 all at once, or I need it to move up $8, sell stock, and have it move back down $8 and buy that stock back. And I need to scalp that $16 so that I don't lose it before it all goes away. And if I'm staying delta neutral the whole time, it doesn't matter, what the total move is. Have I gotten enough chance to make up for all of that premium that eventually goes to zero? And so that's why the expected move is based upon that. And that's why it's a self-fulfilling prophecy a lot of times, because when it does make that move, when FedEx goes up to exactly where that expected move was, all the people that are long options collectively basically have a bunch of stock to sell at that point, right? All of the people that own that premium have a bunch of stock to sell at that point. And it doesn't necessarily mean the stock's going to do exactly what FedEx did, which was fail, but it means it's going to get tested right at that level. And it's going to be like, can you absorb this much stock to sell after hours? And can you get through this area? Because once it gets through that area and it clears that selling of stock, that's when you see the crazy moves. That's when you see an expected move that was 6%, and you see the stock up. Like Oracle, right? So Oracle, that move on earnings, it went up. They're probably for a second, it probably got tested at whatever the expected move was. It cleared all that stock, and it was off to the races because nobody had anything left.
CC Lagator, co-founder Options AI. You can see him most Fridays on the Stock Trader Network doing some education, working in the chat a little bit, doing some tickers. CC, you want to hit us with like some final thoughts going into this open here on a Quad Witch Friday?
We totally forgot to talk about expiration.
I know.
So
I'll give you 1 minute. Go fast.
1 minute. Okay. So it's a big expiration, a lot of volume. But, for today, I don't know, it's probably, we're in a regime, and we have been for the last couple of weeks, where the options market has had a dampening effect on moves, right? And the only important thing to know is that you probably will see, you could see a weird open, you could see a weird close. And somebody even in the chat mentioned SPY's going ex-div today.
Yeah, it did.
Which is a whole nother layer of like on options and all, that's a whole nother layer. But anyway, you might see a weird opening, you might see a weird close, you might see the markets like get to a point midday or even before that where it just stops moving at all. And that's the effect of all of these expiring options, basically just kind of like putting a governor on movement of the market. And the main thing to know is that most of that effect is gone on Monday morning. And so if we were to make big moves and the next decisive move in the market, look out for like Wednesday of next week. It oftentimes, sometimes it's the Monday. Sometimes you'll see weekend news after expiration and it's enough to like get us like that 1% gap, higher or lower on Monday. It's less common. What happens is the market starts testing the fact that it's no longer got all this gamma holding it in place that it did the week and a half before leading into expiration. And it sort of tests, and then it makes a move and there's nothing to stop it.
Awesome.
We are going to be getting some more CC content on the Stock Trader Network too. A little tease there for the pre-market prep audience. Working with CC on the background a little bit. We're going to get maybe another show or two a week from CC. A little tease there.
Yeah,
CC,
like I just sit back and I'm like, there's so many guests. Come on, you come on. I just want to sit back and listen to you because I learned so much from you, CC. You do a fantastic job.
Definitely. Great to be here, guys. Thanks.
Awesome.
Thanks for joining us, CC.
You can always visit them at Options AI as well.
Definitely.
Thanks,
all
CC.
right, see y'all.
All right, have a good weekend. All right, folks, I do have the nice Hive overlay. Want to thank Hive Digital, sponsor of the show, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI, operating with nearly 0.5 gigawatt of renewable energy. Hive is on track to capture 3% of the world's Bitcoin mining production by the end of this year. In the bottom right corner on screen right now is a QR code. You can scan that or visit the link in the description of this YouTube video to learn more about Hive. Thanks again. We always like to pull up the chart. Why don't I add it to the screen here real quick, and we'll just take a quick look at Hive chart. Triple D, you want to do some quick tickers? We only got a couple minutes. You want to?
Yeah, well, I want to go through, I am seeing some fairly large sell imbalances here this morning.
Okay.
So early they're selling. They were buys before, they flipped to sells. It's kind of sells across the screen. We pointed out an ExxonMobil buy imbalance. It is now flipped to sell. So we are seeing institutions putting their orders in here, and they are large. I mean, obviously, as we get closer to the open, these are going to get more locked in. So, if you haven't done a trial, we're going to be carrying you through this options expiration over on Stock Trader Network here from 9 to, right through the open to 9:30. So we'll maybe get some opening trades off of this. But, just, sneak peeks here, like Walmart, 900,000 to sell. Procter Gamble, 400,000 to sell. Coke, 750,000 to sell. Those are significant sell imbalances. Then Merck going the other way, 324,000 to buy. Pfizer, 570,000 to buy. SMR, if you want to go with the nuclear trade, 162,000 to buy. Oklo, 65,000 to buy. So we're going to see some big orders coming in here. If you have you know what? Give me your ticker right now. I'll give you the imbalance. You won't get any NASDAQ imbalances. They don't come out till 9:25. So at 9:25 and STN, we always give that, we'll give as many, as we can for the notable NASDAQ imbalances here. But right now I can give you New York Stock Exchange imbalances because those come out as early as 8 o'clock. So if you got another one, let me know here. Again, Micron NASDAQ stock, you won't get an imbalance on that one. So you got to be looking, are you NASDAQ or you're not? Now, Snapchat I can do. Snapchat is a New York stock. Snapchat currently has 176,000 share buy imbalance here right now. They're spitting them out here right now. They like it when I give these. VST, 92,000 to sell. These are orders that are geared for the open. They can change. They can change very rapidly. Broadcom, Palantir, both NASDAQ stocks. Can't do those till 9:25. Tesla as well. That's a 9:25er. They don't give it to us. NASDAQ don't give us this information till 9:25. New York gives it to us a lot sooner. UNH, 205,000 to buy. That's your flash ticker time on Imbalance Friday.
That was kind of fun.
Yeah, there's a lot of them out there.
we'll jump over to STN. We'll start digesting a little bit more than this imbalance news here. And then, as you just said, we'll get the NASDAQ imbalances at 925. We're going to get you ready for the open over in the Stock Trader Network, folks. Join us over there. I'll put the banner up here. If you just give me 1 sec in the Stock Trader Network. Oh my gosh, there's so many of them. There we go, folks. We'll see you over there. If not, we'll see you next week. Hope everyone has a wonderful weekend.